Now those notes came out, surprise, surprise, you really will be shocked with this one, but they came out and said that they are worried about inflation. Well, where have they been for the last 2.5 years? So who did kill Raisi, the Iranian president? That is the main question you've got to ask. It's very suspicious that he sort of died, or the one helicopter that he was traveling in and the defense minister was traveling in crashed, where the other two helicopters in the same circumstances did not crash. And that's what we're going to be looking at today, and what really is the geopolitical setup. Don't forget, on the 5th of June, we've got the workshops on options. That is for beginners upwards. It's going to be a 2-hour session, live, interactive, a lot of material. I'll be doing it with my colleague Phil. So I have a great load of information. We've got huge experience. Remember, I'm one of the only investment bankers online on Instagram, Twitter, and YouTube, giving you, the general public, as much information as possible in order for you to be successful in your trading. All right, let's have a look what the events were this week. So you had the helicopter that Raisi, the president of Iran, also known as the hangman of Iran because of the amount of people he's summarily executed over the years, whether it's men, women, dissidents, the deaths in the prisons, etc. So he's no angel. He was actually an evil individual, but he died or got killed in a helicopter accident. A couple of things you need to be aware of. Is it a Israel interference? Was it an American operation? Was it an American-Israel operation? Was it a Russian operation? Some say it was Turkey, fired a laser and shot down. And others say it was just a freak accident in a foggy day with a poorly serviced Bell 212 helicopter that just crashed into the mountain range in Iran. A bit strange. Why? Because I said earlier on that what you had is 3 helicopters all traveling at the same time, and only that helicopter crashed. Markets didn't react, and Iran played it down. Now, Iran played it down for a particular reason, because if they said there was overseas interference or it was an overseas assassination by Israel or America or Russia or Turkey, then they'd have to take action. And Iran doesn't want to take any action. What Iran wants to do is to continue with its plan of building up a nuclear facility without too much outside disturbance. So it's just keeping things calm. What is this, and why is this important in connection with financial markets? So when trading financial markets, you have to take a panoramic view of where markets are at and look at all the factors: economic, fundamentals, technical, and obviously geopolitical. So geopolitical is a big issue because the Middle East is burning at the moment and raging with local wars, whether it's Israel, Hamas, Israel, Hezbollah, Syria, Iraq, Yemen, Saudi Arabia, Iran, obviously. So you've got a lot of regional conflict, and that will impact overall financial markets. The other thing you want to look at also this week is looking at the FOMC, the Federal Open Market Committee, the central bank in the US minutes. The minutes are the notes taking at the last Fed meeting regarding interest rates. Now those notes came out, surprise, surprise, you really will be shocked with this one, but they came out and said that they are worried about inflation. Well, where have they been for the last 2.5 years? They are sincerely and seriously detached from what's going on in the streets. So the Fed said it's worried about inflation, and that sent a signal to markets that maybe they're not going to reduce interest rates. What I am saying clearly is that rates are going to fall irrespective of where the economy is at or where inflation is at. We'll be discussing inflation in a few seconds or a few minutes in a bit more detail. But the Fed and the other central banks like the UK, Europe and Canada will reduce interest rates. Well, now we all know that the cost of living is not 2.9%, on the UK 2.3%. If it was only 2.3% or only 3%, that'd be great. So items would have moved up slightly over the last 12 months or slightly over the last 24 months. But we know that the real inflation, the real cost of living, the real amount of money that you're spending out of your salary wage packet or just daily income is moving up dramatically higher than the 2.9% annual, which the central banks declare or project, and then want to fool us and believe that we are actually foolish enough to believe those numbers, and yes, we accept it's 2.9%. That's not the case. So Biden, Washington, his cronies, the Fed, and all the other presidents who are totally detached and trying to fake it and lie to you as to what the numbers are simply trying to pull the wool over your eyes. We all know that inflation is much higher than the 2.9%, and inflation is probably going to continue, as I've said, for the last 8 months, continue trending up. It started around about July, August. There were signs there that the end of the dropping or the descent had terminated or finished, and looks like inflation was actually rising up again. And that's essentially what's happened regarding PPI, which is Producer Price Index, and that is inflation at the manufacturing level, at the wholesale level. And then you had that rise, and then had a fall in CPI, which is the Consumer Price Index. That inflation fell away due to mainly a drop in housing, accommodation, maintenance, taxes, etc. Remember, when you're looking at a basket of what is the measure of overall inflation, then one of the baskets is housing, maintenance and taxes, and rentals look like, according to the agents, look like they peaked at this level, and therefore you could have a fall in rentals, and that would keep inflation under control. So there's an inflation background based on the FOMC, the Federal Open Market Committee's minutes that came out yesterday on Wednesday, the 22nd of May. Nvidia came out with unbelievable results, crushing and beating all estimates, and they also announced not only an increase in their dividend, but they also announced that what they're going to be doing is they're going to do in June the 7th a 10-for-1 stock split. So anyone who holds one share will now get 10 shares of Nvidia in place. That is very good because it makes Nvidia more affordable, and Nvidia will probably go back on the track to rising. So anyone who can get hold of the Nvidia shares at a post split will probably do well longer term, because you get them essentially at a lower cash outlay, and therefore the shares will probably rise up over the next year or two as they continue to beat forecasts. What's interesting is that they're going to have competition within 5 years from other companies like Meta, Amazon, Google, who also want to get involved in the semiconductor chip space and create an AI ChatGPT chip as good as or better than what you do have with Nvidia, and that could reduce overall profits going forward as far as Nvidia is concerned. Moving on to commodities, you had gold peak up at 24.50 this week on Tuesday, Monday, Tuesday, come all the way down to 23.62, 23.64. I did quote that and say that if it doesn't surpass 24.50, then it's probably going to go all the way down to about 23.70, a drop below that. There's a big test, this area. Is it going to go higher than this? Is it going to hang around? Where's it going to go, etc.? Anyone's guess. I see it could probably test the 23.50 level. If it stays from there, then it's probably going to move up. The other one to keep an eye on is Bitcoin. Remember, Bitcoin is a highly risk-on asset, and that has moved up significantly over the last few months. Again, this week it hit a peak again, got to that peak and just pulled back. So there is a view overall out there in the market that Bitcoin will fall all the way back to around about the 50,000. I think it could come back to 52, 55, unless there is going to be a severe market downturn or a crash. And I do believe there is going to be some sort of significant downturn dash crash as regards financial markets. Perception is completely, or misconception is completely wrong as far as markets are concerned. They're very overvalued. They're ballooned out to most disproportionate levels, and the trend is up, but it needs to reverse. When that trend reverses, there will be a significant fall as regards financial markets. Looking onto foreign exchange and foreign exchange currencies, interestingly enough, you've still got a strong dollar on the back of statements coming out from the Fed and the presidents that inflation is not yet under control, so the dollar could stay up there. The DXY, which is the index that measures the dollar strength, or the dollar index, is going to continuously be moving higher over the last few months, and it's solid, doesn't seem to break down, and that does impact obviously euro and the pound and the Canadian dollar and other currencies, especially dollar yen. The yen is in a very difficult position because the Japanese don't know what to do to get the yen back up there. At the moment it's falling, it's very poor value, and there is going to be huge amount of leakage out of Japan into overseas markets. Remember, the government of Japan is the biggest holder of Japanese government bonds. Remember, I've got books out on Amazon. You can share, subscribe. We've got a mentorship program. We've got one-to-ones. We've got a whole array of things out there to help you. If you need any help, you can always just DM me. You can direct message me, send me a text. I'm more than happy to answer. You can subscribe to the Instagram channel. You get direct answers there also. That's it, more or less it for now. This is Mayor Walensky with Driving Markets. Catch you later.